debt ceiling deal finally been agreed upon, sort of, but why no stock market rally? That's today's topic on Gold Silver Standard Insights, brought to you by Ainsley Bullion and the Gold and Silver Standard. Today we have regular contributor Branko back with us to break down all things debt ceiling and the markets. Branko, if we can start with the big overview of what are the details of this apparent debt ceiling deal and how the markets reacted to that, please.
Yeah, so we've talked about the past few weeks. It's kind of dominated the mainstream news cycle, but effectively, the Democrats and Republicans have come together and they've agreed in principle yet. It hasn't been agreed upon in Congress to make it official, but is expected it'll go through later this week before the so-called X date, which is now June 5th, which means when the government's basically running out of money. So that is expected to go through. And the gist of the deal is, you have the Republicans who are pushing for a decrease in non-defense government spending, and they've kind of got their way a little bit there. There is a small faction of the Republican Party, namely the House of Freedom Caucus, who are wanting to actually boycott it because it doesn't go far enough, but it's expected, given their small influence, that it will go through. So effectively, we've got a deal, cuts government spending, and both moderates agree. So you would expect the stock markets to kind of go up because this has been solved. However, that's not what happened. We had a small tech rally in the Nasdaq of about 0.3%, but for the most part, it was a flat sort of day. We had the S&P, which basically stayed the same. The Dow finished the day down a little, and back home domestically as well, we had the ASX open this morning down about 0.5%. So, not really the movement in equities that we would expect.
That's right. And I guess the next question is, why do you think they moved in that way or didn't move in that way, as the case may be?
So I think there's a pretty key point here, which an chief investment officer of a wealth management group was talking about earlier this morning, saying it was more a buy the rumor, sell the news type of event. So effectively, the thesis here was the market had already priced in that the debt ceiling was going to be agreed upon, which in hindsight is something that I probably should have been thinking about more, that's why we weren't getting these necessarily huge moves, because it was already priced in. However, the kind of negative of that is that you're not going to get any positive move based on the resolution. And more importantly, this is kind of the big picture, is that, and this is what the investment officer Perez Ruiz was talking about, was the light is going to be shined upon the economy once again and away from the debt ceiling. So we're going to see, the core issues of inflation and, just general struggle that is the economy right now back into the spotlight. And then that could actually cause, some flow-on effects into the stock market, which we saw kind of, I think we can get into a bit later, but basically we saw gold today specifically rise 0.8% this morning. And I think a lot of that is people realize, oh, wait a minute. So this has been resolved. Stocks haven't gone up. We're still in the same situation we were, the past year or whatever. It's still chaos. Let me rotate my assets, into a more defensive situation.
It seems like, it doesn't seem like it definitely is, that this whole US debt ceiling thing has been the distraction from the larger economy as a whole. Now we're getting to the almost kicking the can down the road. And then, yes, you're absolutely right. Then we get into, oh, here's all our other problems once again. So that's a very good point. My final question really is just about gold versus equities. Really, which do you think, and I think I know your answer, but which do you think is better in light of the agreement being actually ratified?
Yeah, well, so we actually wrote about this earlier in the week, just in terms of why this agreement was positive for precious metals, for gold and silver. And I think that still is kind of exemplified today with equities staying the same and gold going up. It's just the risk reward is higher than ever on bullion. We've been saying that for a while now. And again, even in the event that, it's actually funny to have a parallel between the two, right? So in the event that bullion doesn't move, that's, you might get a small decrease, but that upside of, chaos is still ever present than ever. And then on the equity side, when it doesn't move, it's kind of, this should have been a good reason to have an increase, but it hasn't. So equity is not moving represents kind of a more negative. It's in a more negative light, if that makes sense. Where if gold doesn't move, it's more because it's stable and you're less likely to get that significant move to the downside. So the risk reward is higher than ever on gold, and equities could face some trouble if this by the rumor sell the news does come to fruition, and then when the agreement is consummated, we see equities start to sell off.
Okay, so we're possibly predicting a bit of a downturn in the market in terms of the stock market, the equities. And look, I think we both agree that for gold, it's pretty much a win-win. I think you'd probably agree with that. Yeah, absolutely. So appreciate you breaking down the debt ceiling. We've yet to find out whether it will be consummated as they say, but quite likely there might be a few more back and forth. I want this, no, I want that, but they're going to kick the can down the road. Absolutely. And absolutely, you're right. The focus will then go back to the general economy at large, and generally where the economy goes, gold tends to go in the opposite direction. So I'd like to thank you so much again, Branko, for joining us on Gold Silver Standard Insights. And to all the audience out there, of course, head over to ainsleyBullion.com.au and goldsilverstandard.com. Balance your wealth in an unbalanced world. Take care, and we'll see you next time.